Hi, I'm Matthew Gonin. I'm the head of sales engineering with Energy Smart Group, and this is a short video describing the federal tax credit 30C. It's also known as the Alternative Refueling Property Credit. The agenda today is to give you an overview of this tax credit, who's eligible, describe the ideal candidate, and what are the implications on the return on investment. And finally, we'll cover the key actions to take. So a bit of history on the federal tax credit. It was first introduced by the Bush administration in 2005, and it aimed to develop infrastructure for alternative fuels such as LNG, hydrogen, and electricity. But in 2022, it was greatly modified by the Inflation Reduction Act, and now it primarily focuses on EV charging. Application window is through 2032. So who's eligible for the federal tax credit 30C? Please pause the video if you want to read through all of this, but I'm going to go through the less obvious blue items. So firstly, the EV charger has to be fully capitalized and depreciated. The total cost of the EV charging station cannot be immediately expensed in year one on IRS Section 179. The next thing is, to get this credit, your location has to be located on an eligible census tract, which is defined as low income or non-urban. So how do you determine if you're located in the proper area? Contact my company, Energy Smart Group. With your address, we're going to get your 11-digit Geo ID number, and then we're going to cross-reference some federal provided materials to determine if you're in the right location. And finally, use an installer for the EV charging stations that meets prevailing wage and apprenticeship guidelines, PWA for short. Energy Smart Group, my company, meets PWA guidelines. So prevailing wage means that you follow the Department of Labor's standards for paying people based on the region and based on their occupation. Apprenticeship guidelines means that for the total labor hours, you use an apprentice for at least 15% of the total, and that those apprentices come from a group approved by the Apprenticeship Act. Ideal candidates for this federal tax credit: any business in an eligible zone. If you're in an eligible zone, that is quite rare and special. Take advantage of it. But also if you are not prioritizing a rebate, because in general, the federal tax credit and rebates are not stackable. You have to choose one or the other. What are the implications to the return on investment? Well, the federal tax credit, if we start with the area in blue, you're going to receive up to 30% back on the total installed cost, up to $100,000 per EV charging station, if PWA requirements are met. So that greatly reduces your investment. Now, if you don't meet PWA requirements, if you use a different installer, then you're only going to get 6% of the tax credit. From a revenue point of view, you're going to be able to create a new revenue stream by charging for charging services. You'll also be able to generate and sell carbon credits, which is again something that my company, Energy Smart Group, can help you with. And we're going to be able to attract EV drivers to your location to consume products and services. There are other soft benefits which I also listed here. It depends on your business and what you're trying to achieve. So the key actions to take: well, find a partner like Energy Smart Group who can determine if your site is eligible, has a installation team that meets PWA guidelines, and we have a specialized tax partner that can work directly with your CPA to file the appropriate forms for the federal tax credit. So 8911 and 3400. Energy Smart Group is an all-in-one EV charging partner. So we're going to help you choose the best station for your goals. We're going to install it, get your permits, and we're going to maintain the stations for you. If you have any other questions, please don't hesitate to contact me. My email is right here on this slide. Have a great day.